Dave, welcome to the Building and Growing podcast. We're delighted to have you here today.
Thank you. Thanks very much. Really pleased to be here.
You're most welcome. So this is our first podcast filmed up in Manchester, which, it wasn't raining this morning, which was decent.
Wonders will never cease, right? A, there is some VC activity outside London, and B, it's not fucking raining.
Indeed. That's it. Two very key
unbelievable stats there to kick us straight off.
That's it, indeed. Well, look, Dave, why don't we dive straight into that? Would you like to provide us with a bit of an intro to yourself and then Praetura?
Yeah, so I'm managing partner and co-founder of Praetura Ventures, which is part of Praetura Group, which I also co-founded. We're a venture capital firm based in Manchester, focusing on backing the very best founders, predominantly in the north of England, seed and Series A, tech and health, with, as I say, a real focus on finding the very best founders and entrepreneurs in the north of England. And then, doing the second part of being a VC, which is helping them, once we've invested, to build the best business they can, however that support might manifest itself.
Fantastic. And can you talk us through sort of your journey to founding and, creating Praetura? What went on beforehand?
Yeah, so I sort of did the traditional, didn't know what to do, but was sort of, I guess, finance literate when I was a kid. So I sort of didn't know what I was going to do. Ended up doing law at university, ended up going from there to KPMG doing accountancy, so far so boring. Then did the investment banking thing. Again, sort of that was the first part of my career and really enjoyed it. And I was doing sort of PE deals and IPOs. And then I was really fortunate. We as a company, nothing really to do with me, started doing kind of some earlier stage funding.
Yes.
So we raised the first institutional funding for the Hut Group, which obviously has gone on to be a mega success and then obviously had its sort of issues post-float, but still a mega business and a great sort of example of northern entrepreneurial flair.
Indeed.
And I was part of the team that raised that capital, £6 million. And I sort of fell in love with startups at that point. Found them just so much more interesting than the PE buy out a business doing 7 million EBITDA and hoping that it goes to 14 million EBITDA, and the maths of the debt and the leverage and all that sort of stuff makes you a 3 times return. It was just startups just sort of, I guess, spoke to me, sort of fed my soul a little bit. I sort of, very, very fortunate at that time, worked on the Hut Group, we failed to raise money for AO, which obviously then floated sort of a few years later for 1 point something billion. Mm-hmm. Won the mandate for MyProtein, which eventually was meant to be a sort of VC deal, but we found it hard to raise capital for it, so we eventually sold it to the Hut Group, and obviously it's gone on to be a major part of their success. So sort of those 3 deals came along really, really quickly, or in my head, sort of like London buses, like one after the other.
Yep.
And I sort of went, that's what I want to do. I want to kind of don't want to do this corporate job anymore. I don't want to be part of a big organisation. I want to be there at the beginning of something. So 3 of us set up the business Praetura. We've sort of grown. And you think this was a plan, but it wasn't. It just sort of organically happened. We co-founded a few businesses. We set up a few businesses. We sort of did investments in a few businesses. And that sort of took us from 2011 when we set up to 2018, by which point we had set up a business called Praetura Asset Finance, which was a lending business, lending against plant machinery and kit, an invoice discounting business, which is lending against debtors. We'd sort of done a number of early stage investments, and we'd also co-founded a business called PIB Insurance, the P standing for Praetura, Praetura Insurance Brokers. And that's one of those transactions. We set it up, worked for 18 months with the founders. They got offered a deal by Carlyle Private Equity, one of the biggest private equity houses in the world. Mm-hmm. And they offered them 250 million of buy and build capital, which as 3 lads from Manchester, we couldn't really compete with.
Yeah.
So we sold the business, and that's actually gone on since to become a unicorn. It's one of the biggest insurance brokers
Fantastic.
in the UK. It's one of the top 5 acquirers of insurance businesses. And
incredible.
I was there right at the very, very beginning of it, and I didn't get much of the proceeds, if I'm completely honest, but much, if any, of the proceeds, but it was just great to be part of it. And so
Yes.
in 2018, we decided to put all those businesses together, Praetura Asset Management, Invoice Discounting and Ventures. And I set off to run the Ventures part of it. We raised our first fund in 2019, an EIS fund. Since then, we've raised about 150 million quid.
Wow.
We've built a portfolio of 33 businesses. And overall, the group has kind of gone from nothing. So when you co-founded everything to 50 million of revenue, 550 million of sort of lending book or assets under management, 150 people, 4 offices, and like I look back and I'm not quite sure how and when that happened, but it just kind of did.
Yeah.
And Ventures is, as I say, grown to kind of, we've got about 200 million of assets under management, 20 odd people, 8 operational partners, 33 portfolio companies.
Wow.
And and we're really trying to sort of, I guess, really dive deep into that northern startup ecosystem.
Yes.
Because I believe there's just a huge opportunity there. It's we're fishing in a different pond to a lot of the London VCs, and that's a good thing.
Yeah.
It's also a bad thing because early stage founders in the north of England just don't get the representative amount of VC capital. I can come back to that later. But
Yes.
but we're really leaning into that and want to be kind of that VC of choice for the very best talent in the north of England, and try and give them an experience that means they don't have to spend their life going down to London to meet the money people. They don't
Yes.
have to go and get a London VC to be on their cap table and then do all of that logistical stuff for face-to-face meetings, because I just don't believe that is the way it should be. I don't think that's a fair sort of scenario for founders in Manchester, in Leeds, in Sheffield, in Blackburn, in wherever it might be, right?
Yes.
And that's what we're trying to do. We're just trying to build as much of that ecosystem, and we see our role as being, yes, we're a VC, yes, we're trying to make money for our investors, but also we're trying to be part of a whole bunch of people
Yes.
who are trying to build this northern tech, health, startup, whatever word you want to use, ecosystem that allows the great founders here, because I don't believe there's a monopoly on talent in London,
Yeah.
to build great businesses, scale great businesses, exit great businesses, get that flywheel going, exit great businesses, redeploy their capital into the startup ecosystem and really get it moving.
Yes, yeah, fantastic. Well, look, Dave, what a story, both personal, but also with Praetura. You started off doing much larger deals in PE and investment banking, and then it really seems like you as soon as you got wind of some of the smaller seeds that can be planted and how fast they can grow, you became really passionate about that ecosystem.
Yeah. I mean, there's no other way to say it. Yeah, that sort of feels like I don't want to get all kooky about it, but kind of my spiritual home, right? I didn't enjoy working for big companies.
Yes.
I didn't like the incessant hierarchy, the kind of, not really knowing where the business is going. I like being part of that very early stage, being part of a business that's growing from, one that's still figuring shit out and one that is still celebrates like the client wins.
Yes.
Rather than sort of that big behemoth that just it's doing what it does.
Yes.
It's become a machine and it does what it does, and I think that to me sort of it kind of loses its soul, and that's not where I want to. Where I just don't want to spend my time in that.
Indeed.
And I think there is something about startups that I love. I love listening to founders about why they're doing what they're doing. I love the stories about why they started their businesses, what drove them to it, the pain they felt. They were like, that is a problem that someone needs to fix, and that someone might as well be me. Like, I love those stories. And then the whole northern thing, when I was growing up, when I was at uni, I assumed I'd end up in London.
Yes.
Like, I wasn't particularly patriotic about the north as a kid. Like, it wasn't like I'm northern through and through. I mean, I grew up in just south of Manchester. You know, went to uni in Leeds, sport Liverpool. So like my life has been around the north, but I was never like passionate or patriotic about it as a kid. It wasn't like I'm never moving to London. I hate London. I'm not doing that. Like this isn't an anti-London thing. I fucking love London. It's amazing. It's one of the, like, you do forget it's one of the best cities in the world, and we've got it on our doorstep, and it's brilliant.
Yes.
But as I've got more and more into this journey, the more and more I care about this ecosystem and see it as I've got to do what I can to help this part of the world and this part of the ecosystem and this part of the economic landscape do as well as it can. And I feel like it's sort of like every day or every year or every 6 months that passes, that feeling becomes more and more strong.
Indeed.
And it's something I'm really passionate about. It's something like if I can sort of at the end of my career look back and say, do you know what? I played a tiny little part in making that better for a bunch of people in this region.
Yes. Yeah.
What a fucking great thing to say.
Yeah, indeed. And look, one of the things that you mentioned there really resonated with me when it came down to, you know, founders that just want to solve problems for people. You can want to solve a problem for someone from, you know, Manchester, and it can solve a problem for somebody in Australia, let's say.
Yeah.
I know there's a company called Safety Culture that has, you know, moved from Australia or opened up an office here in Manchester. And
welcome.
Yeah, that's it. It's great, you know, and I'm sure there's companies going the other way. But the other point that really resonated was, you know, sort of being a cog in the machine at the corporate and then solving those problems. When you're working for a startup, I certainly felt that when I left British Airways and joined Revolut. You know,
that's quite. I imagine there's a bit of a difference there.
Yeah,
right?
Oh yeah, indeed, and you can see the impact. And almost, I kind of got obsessed with then going to smaller and smaller companies. From there.
Yeah. I think there's something about kind of, you know, I've talked a lot about this with either founders that we've backed or even my team. Like, you know, that startup mentality, right, is so. To me, it's intoxicating. Like I don't really have a job description.
Yes.
Like it's not about I do this and that's my job and I can't do anything. Like we as a company have this thing that we either can do as an opportunity or we need to solve this thing that's a threat to us or whatever it might be. And the best thing in my world is when like everybody in the company feels part of it.
Yes.
I hesitate there because I don't like the word empowered because I think it implies that someone's giving someone power, and that's not the case. But in the absence of understanding a better word, and I've struggled with this for a long time, is where everybody in the company, from the most recently hired or the most junior person or the person who's just come straight out of university, feels like this is a problem or a opportunity that they can either solve or be part of maximising. And it's not about that's my job title, so I can't do this, or I'm in this team, so I can't possibly look around and do some other stuff, right?
Yes.
That's to me something that I absolutely love. And I think naturally as you grow bigger, you end up with straighter lines and hierarchies and org charts and all that sort of stuff.
Yes.
And that is where, to me, like innovation, passion, caring about the company, culture, kind of goes to die.
Yeah.
You know, and so like I just love that sort of early stage mentality of just we got to do this thing. Does anyone know how to do it? No, not really. Right, well, should we have a go anyway, right?
Yes.
And that's just a great thing.
Indeed. And look, Dave, some of the success that you've spoken about, you know, Praetura's success will have been, let's say, hand in hand with the growth of the ecosystem in the north. Are you able to maybe discuss some of, let's say, the historical fundraising issues that companies in the north may have faced?
Yeah. So just to sort of, I'll set the scene with some stats that always sort of amaze me. So the north as a whole, so this is Manchester, Leeds, Liverpool, Sheffield, Newcastle, all of the surrounding areas together, is about 20% of sort of any economic measure in the UK. So 20% of GDP, 20% of people, 20% of companies. London is the same 20%, which might surprise people, but obviously the north is much bigger as a landmass, but
Yes.
but you know, still has the same number of people, number of companies, GDP. 80% of VCs live and work in London.
Yes.
3% of VCs live and work in the north of England, which is nuts when you consider 20%. But they're both about the same in every single economic measure.
Yeah.
80% is VC, and you know, for the benefit of people who listen to the podcast, this looks ridiculous when you put it on a chart. So you've just got these bars that are the same, and then this huge bar, and it's like, you know, it's crazy. It's 3% of VCs live and work in the north, and VC at the early stage, and I've got to be really clear here. So I'm not talking about your Series D, your SoftBanks, your Tigers, your Sequoia, your A16Z, right? At the early stage, I genuinely believe, despite all the sort of technological advances and Zoom and all that good stuff, it's a local sport.
Yes.
Like, it just is, because you know what? Some of the best times, you know, is between a VC and a founder, the ad hoc coffee, the lunch, I've just popped round to your office, or I'm just walking past. I'll just those face-to-face interactions rather than the Zoom calls.
Indeed.
And what the 80%, 3% disparity does is it means that because it's a local sport, and that's right, 60% plus of VC capital goes to London founders.
Yes.
11% goes to northern founders. And you know, if you take London as being right, as in the right amount of VC capital per capita, per GDP, per whatever it is.
Yes.
That creates a £9 billion per annum shortfall in venture capital in the north of England.
Yeah, that's huge.
It's just a fucking ginormous number.
Yes.
I don't think it's right. So, you know, you're in danger of stats sort of saying things and saying, well, that's right, there's a £9 billion funding gap. It's not, because London isn't right.
Yes.
London is overweight for venture capital. There is more venture capital going into London than there are, in my opinion, VC backable businesses and founders.
Yes, yes.
So London is overweight and the north is underweight, which means that 9 billion number isn't right, but it's just it's a way of trying to bring that to life in terms of, right, what does that mean? Indeed. What it means is the competition for getting funding in the north of England is just much harder.
Yeah.
In the same way, and and this is a dangerous sort of, I'm always very conscious of this topic, right? In the same way that female founders don't get their fair share of VC capital, northern founders don't get their fair share of VC capital.
Yes.
You know, BAME founders don't get their fair share of VC capital.
Yes.
You know, and the two are not the same, right? So, and the disparity for female founders and BAME founders is way worse.
Yes, yes.
But it's still the same sort of thing. And what that means is there is huge opportunity. So it's a huge thing that we need to fix, first and foremost. And the second thing is it's huge opportunity for people like us who happen to sort of focus on backing people in that sort of in that region, because we are in a position where we can hopefully, and I hope this is the case, and I think we're working very hard to be this, where we can work with the very, 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 very best of the founders in our region.
Yes.
Rather than being sort of a London-based VC, and you know, we're not Sequoia, and we're not Accel, and we're not Balderton, and we're not, you know, whoever it might be, Octopus Ventures, MMC, whichever your seed start Series A VC of choice is down in London. Yeah. We're not those, right? So instead of going down to London and trying to compete with those individuals for London deals, which inevitably ends up with you paying, you know, a higher multiple, or you know, whatever it might be, we're focusing very much on backing the very, very best in the north of England.
Indeed, indeed. And incredible stats there. I think the one that stood out is, you know, that 9 billion
it's a huge number,
pound per annum shortfall. Yeah, it is. It's massive. One point that you made very early on is that you're focused on early stage, and so
Yep.
the context of these numbers should be early stage. Are you able to just provide a definition for the audience of what you believe early stage is?
Yeah, and I think that's a really good question, because like the terms of lots of VC have gone nuts, and nobody understands what they mean anymore. Seed plus seed, like they just have all got strange names. And like Series A can mean, for one company, can mean raise £1 million. Series A for another company can mean raise 20 million quid.
That's right.
So what do I mean by seed and Series A? I guess our happy place,
Yes.
as it were, is either a sort of if it's a B2B tech business, which we do a lot, which we back a lot of, we're that million ARR, but we don't have like a hard and fast rule of it's got to be $1 million ARR. What we're looking for is, if it's less than $1 million ARR, can we see the path to $1 million ARR? Is that a clear picture we can paint? I mean, we backed a business called Culture Shift. Gemma, a female founder in Manchester, we backed her when she was like 50 grand ARR, but we could see the path to $1 million.
Yes.
And we could see how it would go on beyond there. And sort of since we've invested, she's now breached she's at 1.3 million ARR, like doing really, really well in a couple of years. But we could see that, so that's kind of our happy place. And then I think anything above that, we're keen to back as well. So it's kind of, for a B2B SaaS, which is the most easy thing to sort of reference.
Yes.
It doesn't have to be $1 million ARR. We very rarely do pre-revenue. We very rarely do here's my PowerPoint deck and here's my spreadsheet of what the business will be. We like to, and I think that would be defined as pre-seed, right? So I think we're at the fanning the flames, not starting the fire is probably the easiest thing to do. Right? There's something something has started.
Yeah.
Some clients are buying it. You've released a product. There is something we can. Even if it's a tiny data set,
yes,
there is something there we can look at.
Yeah, some traction.
Some traction. We call it momentum. So something is moving in the right direction. Like the business that I found really hard to back it looks really interesting. There's a great founding team, whatever. And they've come to you and say, well, if you just give us this £1 million or £1.5 million or two or whatever it might be, we're going to turn on marketing and all these people are going to flood in and buy our stuff, right?
Yes.
And it's like, are they though? Because why aren't they doing that? Like, why can't we prove a little bit of that?
Yes.
To date, and that's one of those where I really struggle with the belief, not because I'm so obsessed with metrics, although I do like metrics, but just because I just like to see something has happened pre the money.
Yeah, indeed.
And the money is good. We know where the money can go. And later on, as you get to sort of Series A and those bigger checks, so if you're talking about raising 5 and we might participate up to 3 million of a 5 million raise, probably our biggest check we've done to date, first check. At that point, you should be able to look and say, well, if we pour money into this thing here, it flows through the machine and we expect to get this out here, right? That's sort of, to me, like a late stage Series A or Series A. Whereas at seed, it's like, we've got this, we're sort of on the journey, we don't know exactly where it'll get to, but we've got some proof points, some indications that what we believe might be right.
Yes, yeah.
And I find it really hard to sort of back those businesses where it's like, we can't tick any of the assumptions. We don't know what customers will pay. We don't know, what the cost of acquisition is. We don't know. We don't even know necessarily what our perfect target customer is.
Yes.
So we do like to sort of. This is a very, very long-winded way of saying we're at early stage, but we're not probably pre-revenue, just a plan.
Yes. Yeah. Indeed. Yeah. Well, I think what you said about the flames being there, and then you're there to fan the flames.
Fan the flames, not start the fire.
That's it. Yeah.
Trademark that, right?
Yeah, indeed. It's a great saying. But I guess I'd like to dig in the sort of the path to $1 million ARR. So what sort of things would you look for in a company that, say, has 100K ARR, and they're saying to you, look, we need funding in order to be able to 10x it.
Well, what you should see in that scenario is you should see some momentum in the sales activity.
Yes.
There should be more things in the pipeline. So one of the things I love doing if I'm doing diligence is getting right into your HubSpot data or whatever you might have, your spreadsheet of all. I don't necessarily need to see it all coming through, but I need to see there's more activity. I need to see that the pipeline's growing. And you know, and there is a process for that. I think oftentimes that 100 grand to $1 million ARR, a lot of that will come from renewing the clients at a higher rate than they were previously. Like so many companies, so many founders, and I can totally understand this, right? They priced the first contracts way too low.
Yeah.
And so part of it would be, right, have we got any evidence that, let's say you're charging a ACV of, going back to some of the examples in our portfolio, you know, we backed a business whose ACV was probably like $2,000, and they were confident that $2,000 could end up 20 grand.
Wow. Yeah.
And we believed them.
Yes.
You know, and we knew it would take time, and you can't just go, right, you can't ring everyone up and go, it was $2,000, it's now 20, but you can at renewal, and you can and the client base was big, so do you know what, they can afford the 20 versus 2 if they're getting value out of it, and they probably knew they were getting a deal at 2. And we believed it. And so that 100 grand to $1 million ARR journey was if we believe that this 100 grand is at, say, 2K, you know, it's 50 clients or whatever, right? Well,
yes.
Okay, well, if that's 20 grand, you know, then you've got a chance. That's, you know, that's $1 million just there.
Yes.
If, you know, and we know you won't be able to get it on all of them, but and it'll take time, and the average will go up slower than you probably hoped so. But we think that was possible, and then you add in new clients at that new pricing, you know, and so we really got comfortable that it was possible.
Yeah.
You know, it was very early. It was very early stage. But we believed it was possible, and that was enough to get us over the line in terms of making that investment. That and the fact that the product was great, the founders were fantastic. We believed in the mission.
Yes.
I think that's another thing that really kind of helps get over the line. I think,
you
know, for those early stage things, I think just belief in what is it that was driving the founder? What's the problem that's solving? What is the thing that you're trying to do? Like I talk about, you know, really backing the mission a lot, and you know, that's why we won't do things that kind of, to me, are slightly anti-ethical. You know,
yes,
like I fucking hate buy now pay later.
Yeah.
And we're not the right funder for a buy now pay later business, right? Because they need a shit ton of capital, and that's not us. But I just don't believe it. I don't believe in my heart of hearts that it's necessary. I believe it's basically doorstep lending repackaged, and I don't think that is a good thing.
Yeah.
And I think it encourages a lot of people to get into debt. You know, and that was quite a contrary view in the time when Klarna was being valued at 65 billion quid. Right? I personally I don't think Klarna will ever make any money.
Yes. Yeah.
I just don't think it'll make any money, but I might be wrong. But it's just a good example of like something we won't do. We won't get involved in Vice. We won't get involved in, you know, we'd never do 10-minute grocery.
Yes,
right?
yes.
No one needs it.
Yeah.
No one in the world needs 10-minute grocery.
Yes.
And no, I don't believe anyone will pay the price it actually costs to deliver the service. So, you know, negative unit economics are a massive, you know, that whole thing that happened in Silicon Valley of we'll just buy a market and then figure out how to make money off down the line. I don't believe in that as a concept, and Praetura is not the right fund to back that anyway because we don't have enough money.
Yes, yes.
So 2 reasons for that, but it's just those sort of things we just won't do. Can't get on board with them. Like they're not necessary. I don't think we need them. You know, I think another example, Kazoo, just massive, like, you know, disrupting this used car industry, but like when you actually think about it, made no money but on a car sale.
Yes, yes.
You know, you can't make money in used car sales if you deliver every door to someone's house, every car to everyone's, you know, doorstep. You just can't make money. It's impossible.
Yeah.
And I think people are seeing that now. Carvana in the US, Kazoo in England. You know, they're just realising that these business models were not disruptive. All they were doing was adding additional services and features that customers would want if they don't pay for them.
Yes.
You make them pay for it, they don't fucking want it.
Yeah, that's right.
Or you as a business make no money.
Indeed.
selling a car, because there isn't. If I got a quote to move a car from here to London, it's going to be 500, 600, 700 quid. It just is.
Yes, yeah.
And there isn't the margins in used car sales to do that.
Yeah.
If your average car sale is $7,000, you just can't afford to deliver the car to somebody.
That's right. And, they're not probably going to get too many returning customers because people don't buy cars frequently.
It's a one-time thing. In fact, what they do is they offer a fucking 7-day return. So what you're going to do is you're going to buy a car, I don't know, for $6,000. You're going to sell it to a customer for $7,000. You're going to pay 500 quid to ship it to their door, plus all of the other stuff that you have to do, because you're buying the car. You have to make it clean. You have to make it roadworthy. You have to make sure it doesn't fucking break down.
Yeah.
Deliver it to a customer, who then has 7 days to go, actually, I don't really like this one. Can you come and pick it back up for me?
Yeah.
It's nuts. It's utterly nuts.
Insane, yeah.
And that is just a mission I would never get on board with.
Indeed. And look, another sort of funny thing that you mentioned before about buy now, pay later and 10-minute groceries is when they started looking at offering buy now, pay later for those grocery companies. And
I mean, I think it's the thing that I posted on LinkedIn that I think has had the most views and and some people actually were like, no, well, why wouldn't you spread the cost of a Deliveroo? Fuck off.
Yeah.
Like, nobody needs to. If you need to spread the cost of a Deliveroo, you shouldn't be having a Deliveroo.
That's right, yeah.
It just, I'm really sorry, and I'm sure there's loads of people who go, well, that's not fair. People, having a Deliveroo is a human right. No, it's not.
Yeah.
It's just not. No. Like, if you can't afford it, if you have to spread the cost of a Deliveroo, please don't buy a Deliveroo.
Yes.
If you want to eat out, go to the restaurant. At least you're not paying 30% markup. Or if you can't afford that, go to the supermarket.
Yes.
It's ridiculous.
It's
utterly ridiculous. And I hope, and I think it will, I think it will get regulated into the ground.
Indeed.
You've already seen it a little bit in Australia, right? With all of those buy now, pay laters that are, absolutely decimated.
Yeah, that's right. Yeah, I was doing a lecture on it a couple of years back.
All right, I feel like I've sort of veered into territory where you know a shit ton more than me.
No. Look, I mean, like just one of the slides that I presented the students was of like the absolute destruction of all the listed buy now, pay later companies in Australia, and this would have been at the end of 2021, so still, or even mid 2021. So I think it got destroyed in Australia before the rest of the world. But
it's just not necessary.
Yeah, indeed. But look, Dave, let's run back to that £1 million pound ARR, because you made some really good points in terms of actually looking at the pipeline. And I think that's a really good takeaway for founders. Be aware that when it comes to a fundraise, if you've got a really well-organized HubSpot and you can demonstrate, traction, not just from a monetization point of view, but also deals in the funnel, that can be really helpful. Really helpful.
I mean, I can only speak for what we do. I've never worked in other VCs, so I don't know what other people do in diligence. But like, to me, I want to. It can't just be, because it's not this simple, that the ARR growth is a product of all the things you do prior to ARR growth. And if you don't have ARR growth, because for whatever reason you don't, if you're not on I was 100 grand 2 years ago, I was 500 grand last year, and a million plus this year. That's an easy story to tell, right? That's an easy, okay, well, that makes sense.
Yes.
If you don't have that, start thinking creatively about the things you could present that that might give an indication that, there is that momentum in the business, and that the million ARR is not quite an inevitability, but something that people can really believe in.
Yeah.
And my team, Praetura, and I, love diving into. Send us your download from HubSpot from the end of the month for the last 12 months, and we'll just sort of see that progression. And people might look at that and go, that sounds like a lot of diligence to do at a seed stage business, but we're trying to help ourselves believe the story.
Yeah.
If we're into that level of diligence, I think founders should know that if you're into that level of diligence, the VC wants to believe the story.
Yeah, indeed.
They're bought in. They want to. They're not trying to prove that it won't. So they're trying to sort of give themselves that confidence, like, the story, we can hit 1 million ARR by whatever date. That isn't just a cross your fingers and hope.
Yes.
So I think anything that people can do to try and work on that, if it is, do you know what, I've got 50 clients and let's go back to my example before, the 50 clients and they all pay 2K. I think we can pay 20. I think they can afford 20K. Win some new clients at 20K.
Yes.
Or on renewal, try to get the current client up to 20K. You don't have to do it on all of them. You don't have to do the whole like shit or bust. Every client is now paying 20K, and and you might lose them all because maybe 20K is not the right price.
Yes.
But I think if you can be like, I've got 50 clients and I think they can pay 20K. All right, well, next few renewals, pitch it. Try and get them to pay 20K.
Indeed.
Because if you can get that, 3 or 4 of those clients who've suddenly gone, okay, I love this service. I was paying 2, I'm now paying 20. I understand it. I'm doing that. Your VC can go really clear. I get that. It won't happen for everyone, and I'm sure there'll be some difference between 20 and 2, and there might be a split the difference thing. But
yes.
I can believe that 100 grand ARR today is actually an implicit 500 or 600 or whatever it might be.
Indeed.
And I think just any of those things, you don't have to prove it with a lot. You're trying to give people enough, like the breadcrumbs to go, yeah, I can get that. I believe this. Because if they're doing that level of diligence, they've already bought into the founder, they've already bought into the mission, they've already done the work on the market and, assessed whether they think the market's big enough. A market diligence is a strange thing for VCs. I'm not sure. Not sure anybody really knows how to do it properly. Market sizing is very difficult, and actually I think in pre-seed, seed, Series A, it's probably over-leveraged in sort of diligence because ultimately you just don't know.
Yes.
And what you think is a massive market might end up being actually quite a small market when you niche down to the very specific thing that the company does, and what you think might be a very small market might actually be something that will explode over time. So market sizing is just really something that people do quite badly, I think.
Indeed.
And actually, I'll take that slightly back. When I say do it quite badly, I just think it's fucking hard to do.
Yeah.
I just think it's a very hard thing to do.
Yeah.
We would very unlikely sort of back a business purely on this market's massive.
Yes. I mean, attraction rules the world. Momentum, as you guys.
Momentum.
So, look, we've talked a lot about, that the sort of momentum that gets demonstrated to you. Let's say you decide to invest. How then does Praetura support post-transaction?
Yeah, it's a great thing. It's something I love talking about. Because we've always wanted to do that.
Yes.
So from the very early stage of co-founding businesses, me and my co-founders and the people who worked with us in the early days of Praetura were in the businesses. I became CFO of one of our first investments, and we floated it, and I became, my first day in a finance function ever was as CFO of a listed business, which was a bit of a baptism of fire. I didn't have a fucking clue what I was doing. But, it seemed to work out okay. So we've always had that ethos of being involved.
Yes.
And when I first set up Ventures and we raised our first fund, I had this plan of people in the business and sort of, full-time employees looking at portfolio. And I'll be honest, as we went into the pandemic, and this is a long-winded way of answering your question, but if you allow me.
Of course.
Went into the pandemic, so the beginning of 2020, sort of knowing in my heart that what we had wasn't going to be right. It wasn't going to scale. It wasn't going to quite work. Mm-hmm. And then the pandemic hit, and we've got bigger problems, right?
Yeah, indeed.
So March 2020 was horrendous, and April 2020 was horrendous, and May was horrendous. And I started speaking to a guy called Steve Corns, who was previously at Phones for You, one of the leadership teams there, obviously a massive business, and then CFO and CEO of AO.
Okay.
So, he was with AO from 7 million in revenue to 1.5 billion in revenue.
Wow.
So, oversaw a lot of growth, the whole journey.
Indeed.
And I started speaking to Steve, and I didn't really know him. I'd met him a few times, but I didn't really know him. And he just was an investor in our fund.
Yes.
And I don't really remember how it first came about. I don't remember why the first conversation happened, but I remember it was in the middle of lockdown. People were still working out how to use Teams or Zoom or whatever it was. My Wi-Fi was spotty. But I started speaking to Steve, and an ad hoc conversation became a weekly conversation, became kind of like formal mentoring, of me through sort of that pandemic year 2020. And eventually Steve sort of joined me as chairman of Praetura Ventures and joined me on the investment committee and invested money into Praetura Group.
Yes.
And sort of, I guess at the end of 2020, like that Christmas, I kind of realised I'd learned more in sort of working with Steve as a sort of CEO, coach, mentor, whatever the wording is, in 9 months than I had in sort of like 9 years of just getting up and doing what I thought was the best thing to do for the business that day. Like a really profound effect on me. And then at Christmas again, I thought, how awesome would it be if every founder within our portfolio got that level of support, that level of insight, that level of value?
Yeah.
That's real value add.
Indeed.
And so I sort of came away and I was like, how do I do that? And I came up with this plan for operational partners, and I was really, really lucky. I found, including Steve, 5 people who in early 2021 agreed to be our first cohort of operational partners.
Yes.
And the people that I was able to bring in still amazes me, but, you know, we had people like so Colin Green. I won't go through every single one, but Colin's a good example. Colin, you know, spent his life in big tech, worked for Apple, ran Apple Korea, ran Apple Japan, then went over to Cupertino to work for Tim Cook, ran consumer retail for Apple, had a $17 billion sales budget selling to Walmart, Best Buy, all that sort of stuff in Cupertino, you know. And he's come back to the Northwest for family reasons, and somehow I bumped into him. Somehow I managed to pitch him the idea of being an operational partner, and somehow he agreed to become one.
Yeah.
You know, alongside some other sort of experienced founders. So another of our first cohort was Don McGregor, who was co-founder with Stephen Bartlett on Social Chain.
Okay. Wow.
So I was able to kind of get these people, and so we started just trying an operational partner model of like, they all gave us a day a week.
Yes.
With a pretty, you know, I guess going back to that startup thing I talked about of not having sort of job descriptions, a pretty loose job description, basically. Very, very simple mandate. Help our founders build the best business they can in any way you can.
Yes. Yeah.
And it's just worked so well. It's just worked so well. We now add an operational partner every 3 to 4 companies we add to our portfolio.
Yes.
We've just brought on, or just bringing on, 2 more into the network. So the latest 2 are a guy who has recently sold his tech business to Uber from Manchester.
Yeah.
So Uber, like core technology within the Uber app today, built in Manchester, sold to Uber, 2 years of working with Uber, and now he's working with us as an operational partner.
Such
so
a success
amazing,
story.
Amazing. Like, and I've just got we've got this group. We've got like, you know, huge consulting firms, partners for the North of England in healthcare, working with us on our healthcare deals, and just got these amazing people. Like, you know, another one, Andy Barrow. So Andy was CTO of a business called ANS. ANS was a software services business, built technology for other businesses.
Yes.
Sold for north of 200 million quid to Inflection. Andy was CTO, but effectively CEO. CEO lived in Dubai. And he joined us as an operational partner, and, you know, looking at that whole tech side of things. And now both Colin and Andy have actually joined me as full-time partners, because I think they came in as operational partners and fell in love with VC. They probably had the same epiphany I did, which is love working with early stage founders, love seeing businesses grow. So they've now joined me as sort of full-time partners, and Colin looks after our operational partner network, and Andy looks after our tech investments.
Fantastic.
But it's worked so well, and, you know, the requirement for an operational partner for us is someone who's been there, seen it, and done it. Absolute humility in terms of, like, it's not all about them.
Yes.
They've probably made enough money where this is a choice to do it, not a requirement. You know, we do pay them a little bit of money, but that's not why they're doing it. This isn't the way they're going to make their fortune.
Yeah.
And kind of a desire to give back to those people who are on the journey, not having done the journey.
Yes.
And it's just been so good to bring in, you know, amazing people. We've got Paul Johnson, who founded, scaled and sold a SaaS business for north of 50 million quid. We've got Helen, who was chief people officer at Dr. Martens, saw growth from 800 people to 2,500. Was there when replaced the exec team, worked with Praetura, and then floated it for $3 billion or whatever it was. Like,
it's incredible.
Just the quality of people, and I pinch myself pretty much every day. I'm like, what the fuck are they doing working with us? But I think they just like that we're trying to sort of do that ecosystem build. It's more like we would see ourselves a bit more than just a VC.
Yeah.
And I think we've hit on something that people who've been there, seen it, and done it. Maybe they've stepped down from whatever their main gig was, the thing that's made them the money.
Yes.
And they're looking for something with real intellectual stimulation, working with great people, trying to do something cool.
Yes.
And working with founders, which people really love, and we've just been really lucky. We've found some amazing people, and as I say, they don't really have a job description. The sole job we have is help founders build the best business they can.
Yeah.
If that's mentorship, great. If that, and lots of the operational partners have one-to-one relationships with a number of founders in our business. That's like a proper mentorship thing, like CEO coaching. Some of them would be like, right, well, Helen obviously has a people background, so if we're recruiting a senior leader in one of the businesses, which founders it's really hard for founders to hire. A lot of them haven't worked in great businesses, so they're not even sure they know what good looks like when they're looking for that C-suite people.
Yes, yeah.
Yeah, being able to call on Helen and go, right, well, will you help me interview people? Which she does.
Yes.
Being able to call on Colin, will you help me interview people? Amazing resource,
Indeed.
And it's never our decision.
Yes.
If we do help interview, and this is just one example, or if we're looking at strategy, another example, we're never ever going to be like, that's the way to do it. This is what you must do.
Yes.
But we will give an opinion.
Mm-hmm.
And if it's like we got down to the final two, and the founder loves candidate A, and that we prefer candidate B, we go with candidate A.
Yes.
Because it's their business.
That's right.
But we are definitely able to say, and do have those frank conversations, which is we think B,
yes,
but we back you.
Yeah, it's
so
very
it's
important
hugely
for
important.
founders. Yeah,
And I think when you talk to people about VC and they talk about, are you an active or a passive investor and things like that, active has quite a bad connotation, right? Because it's kind of like, do you want to run my company?
Yes.
I think for any founder who is listening to that, VCs don't want to run your company.
Yeah, indeed.
No matter which VC they are, no matter what they're doing, they don't want to run your company. They're not capable of running the company. They couldn't possibly begin to try and run the company.
Yeah.
So what I prefer is sort of like it's almost like a consultative VC. So we want to be partners. We want to be in there, fighting the good fight, and we want to be part of it, and we want to have a great relationship with founders.
Yes.
But we don't want to run the company.
Indeed. And I think it's such an appeal to founders to know that, they've got operational partners that can support them, and it's not necessarily something that's mandated. The support, the option is there. Yeah,
it's absolutely an option. Like, we never put on, right, you're going to partner with them, because that's like not what we do. Is we give founders the option. Who do you think you're most interested in speaking to out of our operational partner network, or partners, or whatever it might be? And then we put a few of them together and we see how it works. And if the bond's formed, great. If there's not a bond, then which makes it it can feel a bit unstructured, but it's deliberately unstructured.
Indeed.
And thus far it's worked. We've got 33 companies, we've got 8 operational partners. So the question is, when we get to 100 companies, does it work with 30, and do we need to be a bit more structured? But that's a problem for another day, not today. And it's just it is something that people really like.
Yeah.
And people seem to really value. It's definitely something we're. It's one of the things I'm really proud of. Like that, it's something that genuinely I do think we are helping in some way. And I think a lot of VCs, if they were really heart of hearts, would struggle to really go, that's what I do.
Indeed. Dave, look, thanks so much for sharing that. We've covered a lot today in the podcast. And just before we wrap up, what I'd like to do is ask you for sort of 3 key takeaways for founders.
In what respect? So in what respect?
Look, I mean, it can be in any respect. Let's say that, you know, you're in an elevator with 1,000 founders. You had 30 seconds to knock off 3 pieces of advice.
Okay, fucking hell, that is a wide ranging question. Okay,
Yeah.
the first thing that I think I had to learn, and I think that founders is no one knows exactly what they're doing.
Mm-hmm.
Like, I used to sort of think, and I'm going to expand on this, and it's going to take up more than 30 seconds, so I'll apologize immediately. But I used to think when I was younger that, like, my bosses must just know what to do.
Yeah, yeah.
And you look around and, you know, you look on social media and there's a lot who will profess they know exactly what they're doing. Mm-hmm. And I think once you realise that no one does.
Yes.
And once you realise that even those people you really admire and sort of see, and this is one of the things that sort of, you know, I talk to Steve a lot about is, you know, once you realise that everyone's just figuring shit out as they go along.
Yeah.
And yeah, you might want to prep and all that sort of stuff, but it's okay to not really know and you just got to go with your gut.
Yes. Yes.
I think if you sort of look at what founders generally talk about and what founders generally would ask a VC is like how to raise funding. I think the bit of advice I give is, you know, go to the people who generally do what you're trying to do. Mm-hmm. So if you're trying to raise 50 grand, don't go and speak to Sequoia.
Yes.
If you're trying to raise 200 million quid, don't come to Praetura, right?
Yeah,
we can't do it, right? It's just not part of what we can do. So go to the people who have backed companies that look and feel like they're at the same stage. So if you're a health tech business or if you're a deep tech business, don't go to a fund that does mainly consumer investments, right?
Indeed.
They're never going to break their investment criteria for a business. And actually, one of the things that I tell my team a lot is if they don't look like they fit our criteria, don't meet them.
Yeah, yeah.
Because all you're doing is giving yourself a problem.
Because
what if you meet them and you like them, then you try and find ways of bending your investment criteria to make it work. And it's just like, that's not purity of thought. So I think one of those is really to go to the right people. Mm-hmm, mm-hmm. And then I think the final bit, if it is a fundraising sort of question, which I think is a lot what founders are looking for, is when you've found the right people, it's super important to be really authentic about where you are, what you're doing, where you're going.
Yes.
And try and get to the authentic selves of the VC. Mm-hmm. You know, so it's as much a two-way conversation. I know there's this whole like, I think the idea of saying it's a pitch makes it sound like VCs have all the power and founders have none of the power, and the VCs are trying to protect the money, and the founders are trying to sort of come in there and get it. And
yes,
it should be a two-way conversation. It should be natural. It should be a flow. It shouldn't be we're pitching and the VCs are kind of nodding along and making notes and like almost marking them. Like that shouldn't be what it should be. It should. A VC founder relationship should be one where people, both sides, enjoy spending time with each other. And you feel like there's a common goal. There's a shared passion. You know what? It's something that is simple as, you know what, I'm going to enjoy spending the next 3, 4, 5 years of my life working with these people. Mm-hmm. And I think if I can just add one more thing to that, I know that I'm fucking just going on and on. I think it's really important to find VCs that understand that startups aren't easy.
Yeah.
You know, if I take Praetura, right, you know, how many budgets have we hit in the 11 years we've set up the business? Not that many. Mm-hmm. Especially early days, right?
Yes.
Because you believe you can do shit and you want to do shit quickly and you can believe it can happen and revenues, you know, and all that sort of stuff.
Yeah.
And I think anyone who doesn't really understand that is going to be a bad partner for a founder, because most founders will miss their budget in some way.
Yes, yes.
You know, you won't be able to hire as quickly as you thought, or the new salespeople you bring in won't quite deliver to the plan as quickly as you thought, or indeed ever, or, you know, those clients that you thought were definitely going to sign might not sign, or they might take 6 months to sign. You know? You're going to, like, and I think where the relationships can really go south is where sort of a VC is a little bit like disappointed, or even I've seen it where they're angry because their budget's been missed, right? Like, why are we behind, you know, and they get into that, why are we behind plan? And the answer is we didn't sell as much shit as we thought we were going to sell. Like, that's the only reason there is. Now you can get into what's the process? Are we doing well? Are we maximizing every opportunity? But fundamentally, sometimes the answer to why you're behind plan is just because we didn't sell enough shit.
Yes, yeah, like, that's it.
you don't need any more conversation around that. The conversation should shift to, right, well, what can we do differently? What do we need to do? Or is it just a case of there are lots of good signs that are happening, but it's not come through in numbers just yet.
Yeah, indeed.
And I think it's really important to have find those VCs who you believe will understand just how fucking hard it is to build a startup.
Indeed, yeah.
Because it is really hard. And that's why I think you need more operators in VC. I think you need more people who've built startups or built businesses in VC, because unless you've been there, I don't think you can really have that empathy. Unless you've looked at your bank balance and looked at your monthly payroll and gone, oh, that's going to be tight.
Yes.
I'm not sure you can really empathise with that thing.
Indeed.
That thing that makes founders go to bed sleepless nights, like sitting and looking at spreadsheets trying to make numbers that don't add up in a different way.
Yeah.
We've all been there if you've been a founder.
That's
You've
right.
all been there. I've been in the position where we can't make payroll. I've put money in myself.
Yes.
I've been in a position where we're fucking miles behind plan and we want to do better, and you're looking at it going, why the fuck isn't this working? And why can't we, in the asset finance business, way back when, we couldn't breach 3 million of lending a month. We now do something like 12.
Yeah, wow, far out.
In that business, but we could, for the longest time, we could, no matter what we did, we just couldn't get above it.
Yes, yeah.
And we were, I think that's super frustrating, right? But sometimes you have to accept, it is what it is.
Indeed.
Keep doing the good things, keep being the good things. Have a real desire, have a real sort of belief in, this is what we're going to do and we're going to carry on doing it, and we think we're doing the right thing, and eventually it should turn and that sort of stuff. Whereas I think in those scenarios, a lot of times there's lots of just panic and why don't we try this and why don't we try that and we'll do this and what about selling this, and that's not probably going to work.
Indeed. Look, Dave, we've covered a lot. I know, I mean, we are almost out of time or out of time.
Sorry.
But I wondered whether there was, let's say, a message that you wanted to give investors and VCs about investing in the North.
I just think there's such an opportunity, and I think a lot of London VCs know there's an opportunity. I think every now and again they send someone up to go and do some deals, or they'll go and do a roadshow and meet some companies.
Yeah.
I think the best, I think if people want to really get into this area, they probably need to invest in a team or people up here doing it.
Yes.
And or partner with some of those people who are on the ground, right? We Praetura would love to partner with great VCs from London, doing some of the absolute best deals out of Manchester. We've partnered with some absolute phenomenal VCs, both in America and in London, and we'd like to think that we're pretty good partners. We like to think we're, reasonable people, pretty strong moral, strong sort of moral, ethical grounding in doing the right thing.
Yes.
We'd like to think we're really, a really accessible partner, and we'd love to speak to anybody about some of the amazing founders and amazing businesses that are being built in the North, because VC is a collaborative game, right? It shouldn't be just, it's not all about just, I only care about Praetura. We should be it's all part of that ecosystem build. The more capital, the more success, the more we can talk about the success, the more founders can put it back in that flywheel.
Indeed.
Amazing.
Indeed. Look, Dave, thanks so much for sharing so much today about yourself, Praetura, tips for founders, messages for VCs. Thank you
I've probably
again.
rambled on. Apologies.
No. Look, it was fantastic content, and I'm sure we could have spoken for 2 or 3 hours.
I find myself able to do that a lot now in VC in Manchester, VC in the North. Yeah, I can talk about it all day.
Fantastic. Dave, thanks so much again.
All right. Thank you very much. Cheers.
Cheers.